Hi, everybody, and welcome. I'm Leslie with the New Mexico Small Business Development Center, and I'm here with Peggy McDonough. And if you want information about this topic, Peggy is great at giving us all the facts. I want to remind everyone to type your questions into the Q&A on PPP, EIDL, and employee retention tax credits, the possible tax implications. If you have questions and you type them in, we'll pick them up at the end, so don't worry about that. Also, we want to remind everyone about the risk to their cybersecurity, and we have a whole series of webinars available to watch at your leisure on our YouTube channel. With all that, Peggy, I'll turn it over to you.
Thank you, Leslie. My name is Peggy McDonough, and I am a SCORE certified mentor. Now, SCORE and New Mexico Small Business Development Center are working in collaboration to provide small business owners with professional training and support. So today's webinar is an example of this collaboration, and we hope you'll find your time today productively spent and useful for your business. So we ask you to do a couple of things today. Please do not use the chat function during the webinar because we're not monitoring it. As Leslie mentioned, write your questions and the slide number, if possible, in the question and answer feature in Zoom, and we'll address them at the end of this webinar. So let's do a little bit of housekeeping here. The SBDC is prohibited from giving tax or legal advice. So if you have any tax-related questions, accounting questions, and specific questions about your individual company situation, they can only be answered with credible authority by your accountant or your attorney. So please keep in mind that the information we're covering today is changing rapidly and is based on current understanding of the programs. It can and has changed through the weeks that we've been presenting this. So although we will be monitoring and updating this webinar as new information does become available, please do not rely solely on this for your financial decisions. We encourage you to consult with your lawyers, your CPAs, your payroll experts, and your financial advisors. So what do we want to achieve today? Well, I'd like you to walk away from this webinar with a much better understanding of the tax impacts for various COVID relief programs that have been signed into law here recently. We'll be starting with the Coronavirus Preparedness and Response Supplemental Appropriations Act, quite a mouthful. It was signed into law in March of 2020, and we'll be ending with the most recent American Rescue Plan Act, which was signed and extended by President Biden on March 30th of this year. So you should leave here today more knowledgeable and with guidance on what questions you need to be asking your CPA, your tax attorney, or your payroll professionals in order to make the best decisions for your business. Today, we're going to focus on three specific programs. We're going to talk about the Payroll Protection Program, commonly called PPP. We'll also speak to the Economic Injury and Disaster Loan Grants, usually called EIDL. And last but not least, we'll talk about the Employee Retention Tax Credit, usually also referred to as ERTC or ERC. We'll be reviewing the timeline and the background on each of these programs. We'll talk about the tax implications, and we'll also go over some of the frequently asked questions that we receive. And as I've said it before, we'll end today's webinar by addressing any questions that you may have. So let's get started. On March 6th, 2020, Congress signed into law the Coronavirus Preparedness and Response Supplemental Appropriations Act. What this act did is it declared the coronavirus outbreak a disaster under the Small Business Act. What this accomplished was it opened the door for the SBA to use its lending authority to make EIDL loans for small businesses that were impacted by the pandemic. Then just a few weeks later, we had the CARE Act, Coronavirus Aid, Relief, and Economic Security Act was signed into law. Now, this was quite an extensive act, and it created the Payroll Protection Program and provided nearly $350 billion for PPP loans. In early May, Congress provided an additional $320 billion in funding. Next, we have the EIDL. It introduced the grant to pay Small Business Administration EIDL applicants an advance on their EIDL loans. Now, these advances were treated as tax-free grants and did not need to be paid back. The funds were exhausted very early in July. Then we have it also created the Employee Retention Tax Credit. The ERTC is a fully refundable tax credit for employers equal to a percentage of qualified wages that includes health plan expenses that eligible employers pay their employees. In December of last year, on the 28th, they have the Consolidated Appropriations Act. It was signed into law. Now, embedded in that act was $900 billion in additional COVID relief. $300 billion was in aid for small businesses. So $284 billion to the SBA for first and second PPP forgivable small business loans, and it provided $20 billion for EIDL grants to businesses in low-income communities. So as you'll see, as each of these acts was signed and put into law, each act either added more money to the COVID relief or it consolidated and gave better guidance for the community and where the money should be spent. In March 11th, you had the American Rescue Plan Act of 2020. That was for $1.9 trillion. And it was voted on March 10th, and it was signed by President Biden on March 11th. Among many other things, it provides small business assistance, including specific programs for restaurants and live venues. And on March 30th, Biden signed it and it extended the application deadline for PPP. So this is the kind of environment we're in right now. With all of these acts, what's the interpretation? Exactly what did Congress mean? And what's the impact? Which organizations are impacted? Well, obviously the IRS, the Small Business Administration, banks, CPAs who have to understand the tax implications, as well as business owners. And because Treasury and IRS tax laws and guidance have lagged, there are a lot of confusion still out there, and in some instances, even contradictory messages. There are new forms, there's new applications, there's new confusing interpretation in a constantly changing environment. And this means that you're going to have to deal with business situations and tax implications that you've never seen before. So let's start with the PPP, or Payroll Protection Program. Now, the PPP is a loan. It's designed to provide a direct incentive for small businesses to keep their workers on payroll. It can extend from an 8 to 24-week period. They had two draws. Their first draw, the PPP loans can be used to help fund payroll costs, including benefits, and may also be used to pay for mortgage interest, rent, utilities, worker protection costs related to COVID-19, uninsured property damage costs caused by looting or vandalism during 2020, and certain supplier costs and expenses for operation. Now, with the first draw, that money was scooped up by large businesses very quickly, leaving the small businesses unable to apply. So then they had the second draw, and that came with the Consolidated Appropriations Act in December of last year. This one allows certain eligible borrowers that previously received a PPP loan to apply for a second draw PPP loan with the same general loan terms as their first PPP loan. The application submittals ended in May of this year, which means that we are now in what we call the forgiveness portion of this program. So in each PPP loan, there is a forgiveness clause. A borrower can apply for forgiveness once all loan proceeds for which the borrower is requesting forgiveness have been used. The borrowers can apply for forgiveness anytime up to the maturity date of the loan. If the borrowers do not apply for forgiveness within 10 months after the last day of the covered period, then PPP loan payments are no longer deferred, and borrowers will begin making loan payments to their PPP lender. To apply for forgiveness, work with your PPP lender. Now, I do have some updates on this. The government, the SBA, has formed what they call a forgiveness portal. Now, this forgiveness portal was introduced just a couple of weeks ago. And if you have to work through your lender, if your lender has opted in for this portal, it gives you the ability to apply online and get your forgiveness application accepted much more quickly. Now, right now, we're getting to the point where if you did a PPP loan draw in the first draw, then we're getting to the point you probably need to start looking about applying for the forgiveness because of the 10-month restrictions. So almost all of this is the interesting thing, almost all of the submissions for forgiveness that have been given by the small businesses, they have been approved, and they've been approved at almost 100%. So if you apply for forgiveness for you borrowed 50,000, you applied for forgiveness for 50,000, almost all small businesses are getting that approved, and they're getting that forgiveness application so that they don't have to pay anything back. Now, one of the other things about this portal is if the statistics are that if you've applied, if you get on that portal on the web and you submit your application, it only takes you 6 minutes to do that. And the average has been within 1 week that they will get back to you to see if your forgiveness application has been approved. Now, the bigger banks like Wells Fargo or Chase Manhattan, they have their own portals, so they probably are not using this. But if you are through a small business, a small bank lender, it's a perfect application for them. And right now, they have about 1,200 banks that have opted into this program. You should be contacted by your bank or your lender if they have opted into this program to give you the link so that you can start the application process. I also want to say that Small Business Administration offers free counseling and training events to help you with the PPP program. It's a great website. So it's at www.sba.gov. Now, we will be sending out this presentation, so these links will be in that presentation. Now, the CARES Act spells out that the forgiven loan amount won't be included in taxable income. You don't pay taxes on the money that you receive. This loan is to provide businesses with money to keep running and continue paying their employees. And it's never was meant to create a tax burden for businesses that receive the funds. With the passing of the Consolidated Appropriations Act in December, more clarity on how these expenses covered by a PPP loan will be treated. So previously, anything you spent your PPP loan on was not going to be tax deductible. Now, these expenses are tax deductible. Simply put, your PPP loan will not affect your tax filing process. So historically and forever, if you have a business loan and it is forgiven, that automatically makes it taxable income. It's been in the Internal Revenue Code for years. However, with PPP loans, they break from that code. Congress specified and the IRS clarified that forgiven PPP loans will not count as income. This applies whether your entire loan is forgiven or just a portion. This loan is to provide businesses with money to keep running and continuing paying their employees. Again, it was never meant to be a tax burden for businesses. Simply put, again, your PPP loan will not affect your tax filing process. Now, though Congress has walked back the IRS stance on the PPP and its relationship to deductible income, that doesn't necessarily mean you can leave those funds out of the conversation on your 2020 and 2021 taxes. Whether you received PPP funding in its first iteration or its first draw, or later in 2021, you should still be careful when it comes to taxes. There are still a lot of unanswered questions. Now, some of these questions stem from confusion in the PPP application process. In some cases, Application woes meant businesses received money that they weren't really qualified for in the first place. So for an example, a company may have stated that it had employees when it only really had independent contractors. Now, while that may seem like a case of semantics to the layperson, that kind of difference could have major implications when it comes time to file business taxes. So how you use your funds is also a very important thing to keep in mind. Any money that the business owner used to pay something else that is not included in the PPP requirements will have to be reported as income and expenses in their business tax return. So it's critical that you have clear and concise bookkeeping. Your signed PPP loan contract stated that you would produce monthly government-ready financials. You are required to have bookkeeping in place, and if you don't, you could suffer penalties and fines or trouble with an audit. One of the things that you can do is you should have separate accounts to identify your PPP loan. For example, on your balance sheet, other income, or on your P&L, other income PPP loan and non-taxable would be an example of how you isolate those funds. It's important to adjust your tax planning estimates to include any PPP expenses that were formerly non-deductible. If you received a PPP loan, expect a tax audit. Now, in recent months, the SBA and the U.S. Treasury have announced that all PPP loans in excess of $2 million will be audited. So loans that are less than $2 million are also subject to an audit, but much lower loans have been and will continue to be scrutinized. So there is a high probability that the IRS will audit you. And they also have developed a hotline for anonymous callers to report possible fraud. So how is you as a businessman, how do you ensure a smooth audit process? Please don't procrastinate. Begin by compiling your documentation as soon as possible. Keep all your records, your receipts, your statements, your payroll records, and your PPP documentation. They should be on file for at least 6 years after your PPP loan is fully repaid or forgiven. Make copies to send, but always retain your originals. And of course, hire a CPA who can represent you and defend your business against IRS if necessary. So here are some of the frequently asked questions. Does my PPP count as taxable income? No. Funds from your PPP loan, whether forgiven or unforgiven, are counted as taxable incomes, no funds. You will also be able to claim a deduction for expenses using your PPP funds. Second question, if my PPP loan is not forgiven in full, does that mean it counts as taxable income? As with other business loans, funds from your PPP loan that are not forgiven do not count as taxable income. Can I write off payroll and other business expenses if I used a PPP loan to pay for them? If you received a PPP loan and your loan was forgiven, you can write off payroll and other expenses that were paid for with these funds. Expenses that were not paid using PPP loan can be written off as usual. And even if your PPP loan was not forgiven, payroll and other business expenses may be written off on your tax return. Can I use my PPP loan to pay business taxes? No. Funds from your PPP loan may only be used to cover payroll costs, utilities, rent, or lease payments, or mortgage interest. PPP loan proceeds can't be used to pay business taxes. Can I defer payroll taxes and receive a PPP loan? Businesses that have received a PPP loan can still defer payroll taxes through the end of 2020 and 2021. And again, will PPP loans be audited by the IRS? According to the U.S. Treasury, all PPP loans that exceed $2 million will be audited. The IRS may also audit all other loans, so it is best to be prepared, even if you received a much smaller loan. Now, if I remember correctly, of all the loans, most of them are about 93% are way below the $2 million. So most small business loan owners are way below that $2 million cap. Now, does your state does your state tax forgiven PPP loans? As you can see here in New Mexico, they do not tax forgiven PPP loans. But please check with your CPA to confirm that and make sure these things change and shift, have a tendency to change and shift. And I've also got down here the New Mexico Small Business Development Center organization. This is what I found on their site to give you the origin of this particular chart. So now I want to talk about EIDL. The EIDL, or Economic Injury Disaster Loan, is a loan option that's available through the Small Business Administration. Now, the PPP is through a lender, and the lender then goes through the Small Business Administration. With this, you work directly with the Small Business Administration to help businesses that are struggling with financial hardship due to COVID-19. Now, though the small SBA disaster loans have been available for years, the EIDL was signed into law of March of 2020 as part of the CARES Act, which was passed by Congress to provide emergency relief to American workers and small businesses struggling to survive due to the pandemic. So if you are a small business, nonprofit organization of any size, or a U.S. agricultural business with 500 or fewer employees that has suffered substantial economic injury as a result of the COVID-19 pandemic, you can apply for this COVID-19 EIDL. These loans do not go through a lender. As I said, they come directly from the SBA disaster assistance, and there is no cost to apply. You can find information on these disaster loans by going to disasterloan.sba.gov. Now, the EIDL is a loan and is treated the same as any other business loan as far as taxation is concerned. In other words, funds from the EIDL are not reported as taxable business income on your tax return. Now, with the EIDL loan, there come several EIDL grants. So the small businesses impacted by COVID-19 may be eligible for a targeted, and I highlighted that. There's two grants here, a targeted and a supplemental. So the targeted EIDL advance grant is up to $10,000. In addition, you can get another grant as well for called a supplemental targeted advance of $5,000 if you qualify. These grants do not have to be repaid, and the Small Business Administration is now encouraging all eligible businesses to apply. Now, the grant program was part of the initial CARES Act in 2020, but the funds were exhausted, as I said, within weeks. So in December, Congress allocated some additional funds for the program, and they established more targeted eligibility criteria, particularly pointed at the smaller businesses. To be considered for one of these grants, your business must meet the eligibility requirements and apply, or have applied, for an EIDL grant, or EIDL loan. However, you do not have to get or accept the loan to get the grant, but you do have to have applied. So how do I qualify for a targeted EIDL advance? Well, you have to be located in a low income community, and you have to have suffered an economic loss greater than 30%, and you have to employ not more than 300 employees. In addition, the business must qualify as an eligible entity as defined in the CARE Act. Now, that's a small business cooperative ESOP tribal concern with fewer than 500 employees, an individual who operates as a sole proprietorship, or with or without employees as an independent contractor, or a private nonprofit or small agricultural cooperative. The business must have been in operation by January 31st, 2020, and the business must be directly impacted by COVID-19. So let me go into a little bit of the definitions here, because it can be, what exactly is economic loss? Well, that is the amount by which the gross receipts of your business declined during an 8-week period between March 2nd, 2020 and December 17th, 2021, relative to a comparable 8-week period immediately preceding March 2nd, 2020 or during 2019. how do I demonstrate economic loss? Well, you get your business tax documents organized and up to date, and those will be essential to applying for this grant and demonstrating that you qualify. But what exactly is a low income area? Now, the SBA has established an online tool to help borrowers understand if they are in a low income area, noting that the business address must be located in a low income community in order to qualify. So SBA encourages potential applicants to check the map to see if they meet the low income community eligibility requirements before you apply. And those are, again, you can find those on the Small Business Administration site. And then the tool is really pretty effective. You type in your zip code and it takes you right to the area, and you can find your street and your street address based on that map. Now I'm going to go into the supplemental grant, which is an additional $5,000. The American Rescue Plan in March of 2021 included $5 billion in funding for supplemental targeted advances of $5,000 to the hardest hit businesses. So how do you qualify for this additional grant? You need to have suffered an economic loss of greater than 50%, and you need to employ not more than 10 employees. This supplemental grant is in addition to the $10,000, as I've stated, and the SBA will reach out to small business owners who applied for the targeted advance if they appear eligible for the supplemental grant. So again, getting your business tax documents organized and up to date will be essential for applying for this grant and demonstrating that you qualify. Now, we found in the past that anybody that gets the 10,000 grant, 66% are also qualifying for the additional 5,000. So initially, funds from the EIDL advances were to be reported as taxable income. Now, this decision was reversed under the Consolidated Appropriations Act in December of 2020. It does not need to be included in your taxable income when filing your taxes. And so additionally, qualifying expenses can be written off to lower your tax liability. Legislation clarified that EIDL grants are not taxable at the federal level, that businesses who receive them will not be denied a tax deduction for qualified expenses paid for with those funds, and that the EIDL grants will not be deducted from PPP for loan forgiveness purposes. Please check with your tax advisor about tax implications at the state level. As I showed you right now, New Mexico doesn't, but please check with your CPA to confirm that. Will EIDL loans be audited? When you receive an EIDL loan, you agree to spend the funds provided for certain business expenses. As part of your loan agreement, you agree to maintain records and provide those records to the Small Business Administration, be audited if necessary. Now, while there is a chance you may not be audited, don't skip this critical step. Maintain your records and be prepared to respond if an audit occurs. Does a grant count as taxable income? In most instances, grant funds are not counted as taxable income on your federal tax return. So how do I qualify for a targeted EIDL grant? Now, if you have previously applied for an economic injury disaster loan, you will receive an invitation by email inviting you to apply for the targeted grant. If you have not yet applied for EIDL, you can do so at sba.gov. If your business appears eligible, you'll be invited to apply for the targeted advance. You do not have to accept the EIDL loan or even be approved for the loan to get the grant if you qualify. What if I never applied for EIDL? If you have not previously applied for EIDL, you may apply at sba.gov. You will be able to apply for the low interest loan through December 31st, 2021, as long as funds are available. If it appears your business also qualifies for the targeted advance or supplemental advance, the SBA will invite you to apply. Now, there's one thing that I want to make sure that I mention here at this point. Right now, there is a bill going through Congress for infrastructure. And that's quite an expensive bill. And they're looking for ways to pay for that money. Now it's been through the House, signed, changed in the Senate, and is now going back to the House. But in that bill currently, part of their funding that they plan on for this infrastructure is they're going to sweep up any idle funds that have not been spent. So I would encourage you to get the application in and at least be in line. As you know, sometimes these acts take forever. We thought the Infrastructure Act was going to be signed pretty quickly. It's languishing a bit, but Congress will be back in September to start voting on these things. So just be aware. Can an idle loan be forgiven? No. Idle loans, not advances, must be repaid over 30 years. So unlike the PPP loans, there's no forgiveness process for these loans. Can I also apply for a PPP or Paycheck Protection Program? Absolutely. Paycheck protection loans, although the loan program is now closed for new applicants, may be fully forgiven if they are spent on certain expenses. Essentially, it turns them into a grant. However, if your business received a PPP loan, you may still be eligible for an idle loan or grant. Businesses may apply for both PPP and idle if they qualify. So next I want to talk about the Employee Retention Tax Credit. Now this, to be quite frank, is of the three programs, is the one that I think helps out the small business owner is quite effective. It's $1 for every dollar you spend, you get $1 tax credit. So let's go in and talk about it a little bit. The Employee Retention Tax Credit is a tax credit first put in place last year, and it was supposed to be a temporary coronavirus relief provision to assist businesses in keeping employees on the payroll. But since then, the ERC has been significantly expanded, and in the most recent relief bill in January, the ERC has been extended for all of 2021. Now, I want to give a caveat here, because right now there is a bill that was signed by Congress in the Senate that takes that end of 2021 and moves it into September. So the House still needs to sign on it, and it may languish there kind of like the infrastructure has. But at this point in time on that bill, they are bringing that date up to September of this year. And again, that's to sweep up funding to pay for the infrastructure bill. Now, I want you to be aware that there are very different rules between 2020 and 2021. In 2020, 100 or less qualified full-time equivalent employees changed in 2022 to 500 or less full-time equivalents. In 2020, the tax credit was up to 50% of $10,000. And in 2021, that tax credit was up to 70% of $10,000. Now, this credit is available to businesses with fewer than 500 in 2021 or 100 in 2020 employees who either suspended or partially suspended their business due to COVID-19 because of a government order. And it's important you see here that this is there's two ways to qualify for this. Or could have experienced a 50% in 2020 or a 20% in 2021 decline in your gross receipts when compared with the same quarter in the previous year. So you may not qualify for one, but you could possibly qualify for the second. There are a series of New Mexico government health orders in 2020 and 2021. Each order was effective for different dates. For details on which businesses were impacted and the dates when the orders were effective, you can go to this website and it will list all of those orders out for you so you can look into them and see when your business was impacted based upon government orders. Now, tax credits are incredibly valuable. I think that's why it's one of my favorites. So it's unlike a deduction, which reduces your taxable income. Tax credits reduce your tax liability on a dollar for dollar basis. The credit is calculated per employee and is 70% in 2021 and 50% in 2020 of up to $10,000 in qualified wages paid per quarter. Now, qualified wages include the portion of your employee's earnings that you pay unreported on your IRS Form 941. Now, is this credit taxable? Yes and no. The ERC credit is subject to income tax, so wages on the claimed credit must be reduced by the amount of the credit, which results in the credit somewhat being taxable. Reduction in wages may also impact Section 199A, eligible wages for purposes of the 20% qualified business income deduction, or 50% in 2021. If the credit is claimed on your 2020 payroll taxes after the tax return has been filed, an amended income tax return may be required to accurately exclude the wages that were reduced for the ERC. And most important, there is no double dipping between PPP and ERTC. And I have an example of that, of what I mean by double dipping. So here's my first example, and this is a theoretical company, strictly out of my head. So we have a Star Technical Supports, which is a small business in Roswell, New Mexico. When comparing Q2 of 2020 to Q2 of 2019, Star Technical Support experienced a 55% decrease in gross receipts. Now in 2020, which is the year I'm talking about, in order to qualify, a greater than 50% decrease must be met, and they are at 55. So this business qualifies for 2020 ERTC. Now, this business also in Q2 of 2020, they received a $12,000 PPP. Star Technical Support, they have 5 employees. Each full-time equivalent employee is paid $8,000 per quarter, which includes their health insurance benefits. In Q2 of 2020, Star paid their employees $40,000. And that's 5,000. That's 5 employees times $8,000. That's how I got the 40,000. Now the ERTC at 50% of qualified wages is 50%. So 50% of 40,000 is 20,000. But you need to subtract your 12,000 that they receive for the PPP. So that brings their credit from 40,000 down to 8,000. Still they get a credit, but it's not as much because you have to take out your PPP. Let me give another example. Again, another theoretical company, and they're called Fred's Fantastic Car Wash, and they're located in Los Lunas. When they were comparing Q1 of 2021 to Q1 of 2019, Fred's Fantastic Car Wash experienced a 25% decrease in gross receipts. Now, in order to qualify in 2021, you had to be greater than a 20%, which they do meet that requirement. So therefore, they qualify for the ERTC. They have 10 employees, and each employee is paid $7,000 per quarter, again, including health insurance benefits. So for Q1 of 2021, Fred paid their employees $70,000, which is the 10 employees times $7,000, which is 70,000. Now, because they've increased the percentage, 70% in 2021, 70% of 70,000 is 49,000 ERTC with an annual estimated credit for 2021 of $196,000 for this business. So here's a comparison between 2020 and 2021. The number of employees in 2020 was 100. In 2021, it's 500. The gross receipt decrease in 2020 was 50%. It is now 20%. The wage cap per employee was $10,000 per year in 2020, and now it's $10,000 per quarter. The wage credit per employee was 50% in 2020 and is 70% in 2021. So how do you file? If your business was not in existence in 2019, you can use the average quarterly wages that were paid in 2020. There are some exclusions. You cannot use the owner's pay or the owner's relative's pay when calculating wages. Now, there's been a lot of discussion on this and ambiguity and miscommunication. So there's still a lot of discussion on this. So please check with your CPA to see where the most current where the most current stance with the IRS is at this point in time. You can file to apply for this credit. You use your standard quarterly form 941. If you want to file in advance, use form 7200, advance payment of employee credit due to COVID-19. It's a new form that they created. If you haven't taken advantage of the ERTC in either 2020 or 2021, you can file retroactively using form 941-X, which is the adjusted employee's quarterly tax return. How long do I have to file for tax credit? The latter of 3 years after the original filing or 2 years from paying the tax. Please get professional guidance and support when filing. There are a lot of nuances in filing for this ERTC. There's also a lot of new information that comes out that clarifies some of the statements for this credit. Get advice and help from your payroll expert, preferably a professional who is well informed on current interpretation and tax laws. While the ERC is certainly a taxpayer-friendly relief provision, the IRS is not just giving dollars away. So they're looking at taxpayer submissions both on the front end and then auditing down the road. The best practice is for businesses to provide contemporaneous documentation now when first determining whether they qualify. So to avoid headaches and heartaches down the road, businesses need to have counsel to properly and fully document and paper how the business qualifies for the ERC. Business owners need to be aware as to whether their company qualifies for the ERC, and please don't miss out on this terrific tax incentive. So here are some of the frequently asked questions. I can't claim ERC if I've already claimed PPP or gotten my PPP loans forgiven. Now you can claim both. Congress, in the Consolidated Appropriations Act of 2021, removed the limitation on only claiming one or the other. PPP will only account for 2.5 times your monthly payroll expenses, and it's meant to be spread out over 6 months. So this leaves plenty of uncovered wage expenses for claiming ERC. My business did not have a drop in gross receipts of 50% or more. Again, the CAA has changed the qualifications so that a reduction of 20% now qualifies. But remember, there's also another way to qualify for the ERC if your business has been subject to a partial or full suspension due to a government order. You can qualify for ERTC. My business was shut down during the pandemic. Even a partial suspension order by the government, federal, state, or local, of your business could potentially qualify you. A partial shutdown, a disruption in your business, inability to access equipment, having limited capacity, shutdowns of your supply chain or vendors, reduction in services that are offered, reduction of hours to accommodate sanitation, shutdown of some locations and not others, and shutdowns of some members of a business are all scenarios that still potentially qualify for the ERC. The key considerations are that due to a government order, partial or full suspension is or was your business not able to continue its activities in a comparable manner, and did that result in a more than nominal impact on your business operations? Remember, the partial or full suspension is an alternative way to qualify for the ERC, separate from the reduction in gross receipts test. My company was deemed an essential business, so I do not qualify because of business suspension. Even if your business is deemed essential, an impact or change in your business may qualify you. For example, even if you were open, but your vendors were closed down, or you can't go to a client's job site, you may still qualify. Or alternatively, if part of your business was considered non-essential and was impacted by a government-ordered suspension, you may also qualify. Well, my company has grown during quarantine. This isn't something I should take. Here's the great news. That's great news if your company has grown during quarantine, but experienced a full or partial suspension, then then there are expenses that may still qualify you. Sales have rebounded for us in Q1 of 2021. I can't qualify for this credit. With the introduction of the CAA, you have the option to look at 1 quarter prior to determining qualification. So this means you can determine eligibility based on lost revenue in 2020. Also, if you were subject to a full or partial suspension, you may qualify regardless. We were in losses or do not have any tax liability. This is a refundable credit. So in practice, this means that any credit overage above tax liability is sent to the taxpayer business owner as a refund. My company has grown to over 500 employees, so we are not eligible for ERC. The employee count restriction is based on full-time equivalent employees, which is a more involved calculation than just counting everyone that you have in your office. If you paid any employees to not work or to work less than the hours for which they were paid, then the employee count restriction would not apply for these employees. I'm a charity, and the ERC is only for businesses. The ERC also may provide significant benefit to charities, churches, nonprofit hospitals, museums, etc. Charities can be particularly good candidates for the ERC. I want to stress the failure to document and the tax man cometh. The ERC is a refundable tax credit. It provides robust benefits, as you can see. If you have to draw up a tax provision that makes the IRS lie awake at night, it would be a refundable tax credit involving real dollars. There are a lot of nuances in filing for this credit. Make sure you work with your payroll professional to make sure you get the full credit that you are eligible for. So let's recap some of the things I've talked about today. So what is the process? Well, Congress votes, they enact laws, they provide government funding. The IRS then takes, in the Small Business Administration, state and local governments, they take those acts and they interpret the law that's been signed in by Congress and the tax implications. They build new forms and reporting requirements. After that, the CPAs need to follow those interpretations and they provide guidance to the taxpayers. What's the result? Well, there's a lot of confusion, restating, and clarification that needs to occur. That's part of the reason why the tax filing for 2020 moved out to May 17th. There was a second round of PPP, changes to the employee retention credit occurred. They continued to stay-at-home orders to make it difficult to access taxpayer data, and the IRS is short on staff due to COVID-19 pandemic. Your 2020 and 2021 taxes are going to look a little different than they normally do. So this means you're probably going to deal with situations you've never seen before, including forgiven loans, grants, and unemployment benefits. So it's imperative that you have accurate and up-to-date set of books, such as your balance sheet and your income statement. Track and categorize all of your business expenses on both the balance sheet and the P&L. Receipts and invoices should be digitally should be filed and recorded. Take the time. It's well worth the effort to be able to see where your money is going and ensure that you'll be able to get the most of your eligible deductions come tax season. Please keep in mind, and this is important, that the information is changing rapidly and is based on a current understanding of the programs. It can and likely and has changed. Although we will be monitoring and updating as new information becomes available, please do not rely solely on this presentation for your financial decisions. We highly encourage you to consult with your lawyers, your CPAs, your payroll experts, and financial advisors. Make sure that whomever you consult with, that they are up to date on the most recent guidance from SBA, IRS, and US Treasury. Now, there's one other thing that I want to talk to you about, particularly on the EIDL that just happened last week, so that you're aware of it. It's called EIDL 2.0. There have been some changes in the use of the fund. They've also increased the cap from $500,000 on the EIDL loan to $2 million. Now, there is a formula that they have that will shows whether you qualify or not for the $2 million. But they did open up also the supplementary grant that I talked about to shuttered venue operators. So that's just an example of how things are changing on a day-to-day basis. So please be aware that whomever you talk to is really, really up to date on the current issues. All right, we are ready for our Q&A. Do we have any questions, Leslie?
Peggy, right now we do not have any questions. I do want to remind everyone that you're going to be getting a copy of this presentation. We send a follow-up email. It's going to have additional resources on it. So Peggy gave us a brief overview of tax implications, but again, everything's changing very quickly. And so if you're wanting to seek the no-cost confidential counseling or information on reaching out to SBA, we'll have that available for you. Okay, and I do not see any questions. So if we don't have any, I want to also remind everyone that we will be having Peggy next week with the presentation. So if you go back, you review it and realize that you have some questions that now, because sometimes, you know, with just the overview, it's good to review and then you have the questions. Come back to the next one and we can answer them then. So with all that, Peggy, do you have a last word before we wrap it up?
Well, I just want to kind of some of the next things that the small business owner can do is hopefully we've given you some of the questions to ask and some of the great benefits that are out there. Again, I want to just make sure that you get these benefits as quickly as you can, because as they're trying to scoop up funding for the infrastructure bill, some of these funds may disappear. So please be aware and apply for where you can to get as much of this grant money that you possibly can get for your business to help you through these hard times.
Absolutely. Great last words. Thanks, everyone. Have a great rest of your week.
Thank you.